Somebody had sort of a mechanical question about how do you handle the lot sizing when you want to scale into a position with sort of forethought about the fact that you've got less confidence in your first entry and more confidence in your second entry. That's a good question. It's what we were talking about with NVIDIA. Let's just take a look. NVIDIA this morning, straight up. So when you see a big trend, just like that email that I sent out last night, the little article that I did, you don't want to fight the trend. You're not in the business of trying to pick tops and pick bottoms. You just need to figure out where the most likely price action is going to be right now and what the likely reactions are going to be as the stock continues doing whatever it's been doing during the day. So we like to bracket things up and take a look at this period of time to figure out, has the market settled in? When the market, we leave after the first hour, come back, and we find stocks have done something. Stocks are now in some sort of technical range, and they're giving us reason to react to price moves and to anticipate the anticipators. When NVIDIA did what it's doing here, we saw an opportunity for a long. So we got back from our walk, and here's NVIDIA doing all of this stuff. And we're looking for the probability of a move back down to here that would catch an inflection and move higher. And then the alternate possibility that it was actually going to break through our threshold levels, get all the way down here, and ricochet from 185.73. The second trade is the one that actually had more confidence. The first trade, if it came down and it hit that line, there was a fairly good probability that the volume by price was going to hold up and that we were going to move back up into the highs. But there was also a fairly good probability that we're going to see a repeat of this, where we just pop right down through there and get down into 186.13. Well, if we get into 186.13 and inflect and start moving higher, then I'm hoping that it's going to do this. I don't really want to double up or add shares at 186.13. That's pretty close to 186.38. So if you're managing the trade, you're not really looking at that as a significant excursion. It's not really where you think something is going to happen. If anything, you're looking at this thinking on that first trade from the 186.38 entry, well, where's a good stop? Right down below here, around 186. But wait a minute, we've got a pivot line, and we know that's going to be an inflection. So we don't want to stop out at 186 just to try to get back in again on a 185.73 inflection and wind up looking for a profit objective at 186.13. So if you follow the logic, what is going to happen is the only way for that first entry to become a profitable trade is if it's much smaller than the entry that you would potentially plan down here at 185.73. So if you're going to take, let's say, 50 shares or 100 shares, let's do 100 shares at 186.38. If you take 300 shares at 185.73 on the inflection and look to get out here, then you've got a 400 share trade on, and your average price is going to be down pretty close to 185.73, because that 186.38 trade represents 1/3 the size of the bigger trade down at the pivot line. And you don't have to do big share size. I hear people talking about, well, I can't make money unless I trade 1,000 shares, and I can't, how can you possibly do anything with, hundreds? And you can easily do it. You're just going to make a couple $100 per trade, and that's better than losing money. So if you can make money all day if you're making $296 on a trade, do that 3 times, and you've had a pretty good day of trading. If you look here at the way that these play out, the executions, you can see there, make those bigger. You can see that it played out exactly the way that we anticipated. So you got in 186.38. When this entry happens, we don't get the move back up to 187.06 that we were looking for. Instead, we just oscillate between these two bands. We see that 186.13 is holding up as support. When the price gets down below it, though, we've got an entry order right there. That entry order 3 times the share size of this first order brings our average price way down and gets us out at 186.13. We had an order just sitting there waiting to exit the trade at that support and resistance line. You're not looking for the whole thing. You can't try to figure out, well, how do I get the most money? I need this to go all the way up to 187.06 so I have a big trade. That doesn't do anything for you except for put you on the wrong side of what's happening now. Because the most likely thing that's going to happen as a result of this move here is a retracement, and then exactly what we wound up with. The move back down on what's now a downtrending move from the highs. But it enabled us to catch the bounce, to catch the inflection. We know that pivot lines tend to do this kind of thing. And in this case, it worked out. And our worst case scenario was going to be that a trade with an average price right around here was going to go and stop us out completely right down here below the pivot line. Just a very tight stop, about a 20-cent stop on the whole thing. So you would have 20 cents on the entire trade as a stop out below that pivot line. That's the logic behind going and layering on those shares. I hope that answers your question.